Happy Friday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Friday, September 29th, 2023. We'll start with our executive summary from today, which is number one, the August PCE report reaffirmed the resiliency of the U.S. consumer, a key linchpin of our resilient U.S. economy theme, as well as the immaculate disinflation narrative. Number two, there is scope for transitory Goldilocks to continue getting priced in this fall amid pervasively bearish investor sentiment and a reasonably high likelihood that the trend of positive U.S. economic surprises continues. And the number three, higher for longer, is likely consensus after this week, suggesting investors may find some reprieve from FX and rate volatility in the weeks ahead via downside surprises in European inflation statistics. If you want to review our full morning note, obviously you know where to subscribe at 42macro.com. We'll keep it moving here. Transitioning to my Bloomberg here for we'll go through our daily rundown of cross asset performance on a week over week basis. We got the SPY now flat week over week, but you in terms of what's leading to downside utilities, folks can't get out of this asset class fast enough. Down another 6.9% week over week. Leading to the upside is energy up plus 1.6% week over week. Some very limited dispersion amongst the rest of the sectors there. In terms of factor performance, we're now seeing a big pop in high beta up 1.6% on a week over week basis. Low beta is down 2.3%. So investors are actually getting incrementally pro-cyclical in terms of their factor biases week over week. And in our opinion, that makes a lot of sense in the context of the data we just got out of the U.S. economy in terms of the August PCE report. Geographic performance, SPY is outperforming all geographies on a week over week basis at flat, leading to the downside. You got China down 2.3%. You got Japan down 1.6%, followed by Brazil down 1.5%. Fixed income performance, it's still a rough week for fixed income, down 0.6% in terms of the core ag. The ag there minus 2.2%, TLT off another 2% week over week. I think we've been right as rain as anyone in the world in terms of the bloodbath that we've seen in bonds, and we've seen folks coming out of the woodwork now. Jamie Dimon's joining the parade. Bill Ackman's joining the parade. I want to say Larry Fink's joining the parade as well. You're getting some pretty important folks within traditional financial space, kind of joining the bond market bloodbath parade that we kind of kickstarted going back to early May, our early May warning to get the hell out of the bond market. And I want to say bonds are down about 20% since then on the TLT, maybe not 20%, it's probably closer to 16% since then. But you got a pretty expedient crash out of the bond market as the whole world had to adjust, including the Fed, by the way, in their most recent FOMC, had to get closer to where we've been for the better part of a year, or really over a year now, in terms of our resilient U.S. economy theme. Currency performance, dollar's up 0.6% week over week. You have a decent performance here in the Chinese yuan, up 0.9%. But in terms of what's leading to the downside and the currency market, the Swiss franc continues to suck wind after the SNB's dovish commentary last week. Commodity performance, commodities down 0.7% week over week. Commodities being led to the downside by precious metals, minus 3.1%. You also have ag down 1.4%. Bucking that trend, you got base metals up 2.7%, and then uranium down 3.5%, but down quite a bit this morning as investors probably chase yesterday's highs. And then finally, crypto, Bitcoin up a little bit, 0.9% week over week. It's a pretty big, kind of risk on move in crypto on a week over week basis. If you consider the fact that, things like Solana Solana leading the charge, XRP leading the charge, things like Ethereum as well. So outperforming, when Bitcoin outperforms, it's usually risk off. When the rest of the currencies, or not currencies, tokens outperform, that's when you typically see more of a risk on bias. And that rhymes with where we are from a factor dispersion perspective as well. You got high beta outperforming on a week over week basis. And then lastly, transitioning to my Lombo dashboard, we'll get you out of here with some trading ranges insights. So in terms of the trading ranges, we only have one overbought oversold signal this morning in terms of the key macro factors. That's coming in the form of base metals being overbought here. So that makes a lot of sense if you're, I don't know too many people long base metals, but if you were short base metals, this would be a good spot to short base metals if you have a view that the Chinese economy is likely to continue sucking wind this fall. So that'd be a good spot to tactically put that trade on. And then lastly, we'll leave you with some S&P levels. S&P is right in the middle of its range here at 42.20. 1 is the lower end of that range. 45.31 is the top end of that range. So we'll wrap it up there. Darius Dale presenting our macro minute for Friday, September 29th, 2023. Hope you've enjoyed these. If you are not a subscriber of 42 Macro, you're obviously only getting a little snippet of our daily lead-off morning note in terms of that executive summary. Each of those sentences were, sort of there's tons of charts and data, obviously supporting the conclusions on each of those sentences. So we highly recommend those of you who are not subscribed to at least check it out. And if you're not planning to subscribe, the bare minimum, shoot us a like or subscribe on our YouTube channel. We appreciate that at the bare minimum for the free work that you're getting from us. These insights do cost money to generate, so we appreciate you supporting our business and my dream of democratizing institutional grade macro risk management process. So we'll wrap it up there. Everyone have a great week. Enjoy some football. We'll catch you back here on Monday. Cheers.